Hey everybody, Joe here from Avalon. I just want to start with a quick introduction here. My name is Joe. I am from Avalon Accounting. We do um, small business accounting here in Canada. I'm located in Victoria, but we've got a team across the country, and we work with small businesses scaling up to $1 million and $5 million, and help those business owners build great businesses and do their accounting and stay on the right side of CRA. So that's what we do most of the time. But I do like to take time out and do some of these learning and education. It's a really big part of our DNA is to educate small business owners in Canada. And really looking forward to today's session, which is going to cover preparing to sell your small business. So I did a poll starting out here. Check on the results of that one. Um, and see how that went. Let's find out what people are interested in. So, looks like people are mostly interested in preparing or how to maximize the value of a business. So I'll spend a little extra time in that area. And we'll go over a few tax things, but I got zero votes for that. So I will do that as well. And some people wanting just a little bit of everything. So I'll spend a little extra time in maximizing the value of your business. Sellable businesses are great businesses to work in. So I would do want to, I mean, it's where my heart lies is building that business. And if you want to sell it, great. But if you don't, it's going to be a great one to run anyways. So that's my philosophy. And I'll take you through some of the ways to work towards a more sellable business, which is a more enjoyable business. So I'll get into that as well. So I am a CPA, and I do like to educate Canadians on this stuff. So please, we'll have time for questions all throughout. So if you have a question, just throw it in the chat and I'll see that. And I will either answer it then and there if it's relevant, or we do have a Q&A portion of today's event at the end. So I'll leave lots of time for that. So please just keep the questions coming, and I'm more than happy to answer what I can. I have wide and broad knowledge, but I don't know everything. So if I can't answer your question, hopefully we can figure out some way to get the answer to you. But I'll do my best. So without further ado, I will start with kind of showing you exactly what we're going to cover. So there is tax considerations. So for any business, even thinking about selling your business one day, there's going to be things that you can think about for tax right now or just have knowledge on, so you don't get caught out if you do kind of want to sell your business next year. That might be a goal, but if you're not aware of some of these things, then you can get caught out and not be able to do that sale in a year or suffer some really bad tax consequences. So we want to avoid that. So I'll make that quick, but I'll also just want to make sure that everyone's aware of stuff like that. Some timelines for selling your business. So what are the steps involved? What does it look like from a seller's perspective? Or if you're interested in buying a business too, that might be useful information for you as well. Then I'll spend a majority of the time in building a sellable business. It's definitely where my most enjoyment lies, is building a more efficient and revenue generating and profitable business. So I'll give you some ideas for that, and what people look for when trying to buy a business for top value. And then methods. I'll do a quick summary of methods to sell your business, how to make the sale happen. And then we'll have time for the Q&A there as well. Awesome. And thanks for joining today, everybody. Really do appreciate your time Friday afternoon. It's a good time for me. This was the most voted time. So here we have tax considerations. So some things to think about if you're running your business. One is it is actually really beneficial to be incorporated. I'll start there. If you're looking to sell your business one day, there's definitely some tax advantages to being incorporated that you don't get as a sole proprietorship. Really, I think, when people are looking to buy a business, they're looking at corporate purchases as well. So something to keep in mind is if you are looking to sell your business one day, definitely go ahead and incorporate your business and build it from there. So two types of sales that can happen, and this is one of our perennially a question on our big final exam for CPA is an asset sale versus a share sale, and what the tax implications are of those things. So there's a whole analysis can be done on this, but essentially what you need to know is that if you are ever approached by a buyer and they're giving you two options, either to buy the assets of the business or to buy the shares, generally for you, it's more preferential to sell the shares of your business. And the reason for that is one, lifetime capital gains exemption, which I'll cover in a second. That's a big one where you get a tax-free capital gain on the sale of the shares of a small business corporation in Canada. And that means more cash in your pocket. Essentially, is what we're trying to do when we're evaluating those two things. Is that you want more cash in your pocket at the end of the day. But there are some qualitative things to think about as well. And with a share sale, you're selling those shares and you're kind of done and dusted. You sold the shares, you're out of the business. Whereas with an asset sale, they're pulling the assets out of that corporation and just buying the assets, and you're left with the corporation. So the cash goes to the corporation. The assets are sold, like websites and branding and all goodwill that you've built in that business are all gone. And now you have a shell company that you have to deal with. So there is some qualitative stuff there to consider between those two things. So generally speaking, a share sale is good for the seller. So if you're selling your business, you want a share sale. And for the buyer, it's better to do an asset sale, because what they don't want is to buy the shares of that corporation and then realize there's a tax liability or some outstanding litigation or some unhappy customer from years gone past. So they want to buy the assets and leave the corporation as it is. So just something to consider there for the future. Or if you're evaluating ever a sale, understanding that there are these two sort of avenues that people go by. But I will cover the lifetime capital gains exemption. So we just call it capital gains exemption, but there's a lifetime. And what the lifetime means is that you have an exemption in your lifetime, uh, as it were, that you don't have to pay any tax on a capital gain uh, of the sale of shares of a qualified small business corporation. And that's a mouthful, but essentially it's a small business corporation. So a small business in Canada, that you control, that you're a Canadian, you control it. And then you get one of these per lifetime. And the amount is just over $1 million now. It goes up every year. So you get a little bit extra every year, but essentially it's about $1 million once in your lifetime. You can do multiple sales. I mean, it's just a lifetime total, but that is capital gains exempt. So generally, what would happen is if you sold the shares of your corporation for $1 million, and essentially you paid zero to start that business, you maybe $10 to subscribe to your shares. The difference between that $1 million and the $10 is your capital gain. And you would pay an inclusion rate of 50% on your personal tax return, and that could be hundreds of thousands of dollars in tax that you owe. But with the lifetime capital gains exemption, Okay. So our internet just went down, so I'm on a hotspot now. So we're dealing with it here. I'm jumping back in. I was talking about the lifetime capital gains exemption, which is, if you do sell those shares, you're going to have a tax-free amount of the capital gain on that sale of shares, but it only happens with a corporation. So that's useful to remember for the future. Tax planning strategies. One, I think the number one is to definitely incorporate your business. And then the others are to really make sure that um, that you're thinking well ahead. So part of that qualified small business corporation that I chatted about before is that you have to own the shares of that corporation for 2 years. So if you just start your business or you bought maybe the shares off somebody else, you you have to hold those shares for 2 years. So you got to think quite far in advance to make sure that the sale of those shares is going to be a part of that lifetime capital gains exemption. Super helpful. The next is that you have to maintain a certain amount of assets in the company that are revenue producing, that aren't passive assets. So for 2 years, for the full 2 years before you sell those shares, you need at least 50% of the assets, the value of the assets in the company, used for active business income. And how this sort of plays out, I know that's kind of a strange thing to think about, but really, what essentially they're trying to get to is that you don't have a bunch of investments in your business. This is an investment type business. It's an active business. They want to promote people growing businesses that employ people and keep people productive so that those people can pay their taxes and the business can carry on. So that's really the incentive behind these tax considerations. So you have to think of that. So 2 years in advance, you might have to move some cash around, take some investments out of the corporation, move them into a holding company. They call it cleansing the corporation. So something to think about 2 years in advance of your sale. And then on the date of the sale, it has to be 90% active assets. So there is some more cleansing that needs to be done before the sale of those shares as well. They don't want people passing with lifetime capital gains exemption passive assets like investments in stocks and bonds and things like that. So, really for active businesses, but something you really need to know about well ahead of time, and is good information for any business owner to know because it could really affect how much tax you pay on that sale. You don't want to finish the sale and then figure out, was I actually did I actually qualify for the lifetime capital gains exemption? It's something you need to plan for rather than react to after sale. So that's the tax bit. And thank you for that comments there. Quick pivot. I'm on a hotspot now. And we'll see when the internet comes up, but I usually like to hardwire. So hopefully the connection's still okay. All right. So next up, preparing to sell a business. So like I mentioned, you got a 2 year sort of runway that you want to work with, but keeping good financial records because the value of the business can be based on things like profit and revenue. So really getting those in good standing order so you can show those things. You definitely don't want to be hiding income from the CRA because you'll be looking at tax returns as well. Solid business operations. It's nice if you can build something that you can hand over a process handbook for. So that's something to think about there. Others are, and we'll get into this as part of the extracting the most value, is that you don't want one customer that you rely on heavily. You want a broad base of customers that pay you a little bit rather than a couple customers that pay you a lot because of that risk to a potential buyer if they want to buy that business and they aren't sure if those two big customers are going to hang around. That's going to impact the value that you get. So trying to diversify over that lead up to selling your business, but we'll get into details there. um, yeah, let me jump into the next bit here. So timelines for selling a business, it can take some time, and it can vary depending on who you're selling to and what the terms of that deal might be. But there's some key things that can affect it, and if you can plan ahead, have really good records for, it's going to help. So some key factors are financing, so making sure that you understand that the other side of the sir has to get financing, super important. Or if you're going to finance part of it on your own, what that means for the timeline of the sale. There's lots of legal stuff to go through, so documents of purchase and sale and other things there. So definitely consider how long those things take, and due diligence period. So being able to provide the information that the buyer wants in a reasonable time frame, and then giving them an amount of time to review that and say yay or nay on that. So our timelines there. And this was part, I think nobody had voted much on this stuff, so I'm gonna just go past this pretty quickly. But this is where we get into what it means to build a valuable business. So the top things really that are going to affect the value of your business are: number one, revenue, and number two, profit. And not just profit, but cash flow. Because when we talk about things, I don't know if you've heard of, but EBITDA, EB, EBITDA, which is earnings before interest, taxes, and depreciation. And That is really a proxy for cash flow in your business without it actually being cash flow. But it gives you an idea, it gives a purchaser an idea of what sort of cash the company is generating. So super important to understand that that's a big contributing factor to the value. But those are by far the biggest things that people are going to look at. And then we get into details on how more what things make your business more liquid. So what's going to increase the value in terms of how quickly someone wants to buy it, how determined they are to purchase your company. Those are really the other big factors that are going to help you sell that business for the maximum dollar amount, with maybe people knocking down your door to buy it or having competitive offers. Those are all really important. So one of them is a solid customer base. So really important to understand that that can mean a few different things. But number one being that you have a diverse group of customers, that you have people that pay you a little bit, maybe like a good broad range of a lot of different clients, versus that one or two that pay you a lot every year. Really high risk if that's the case. The others are a return business. So you want to think about your customer base being how many repeat, versus do you have to really work hard for every sale, or do people just come back to you over and over and over again? And that's really critical. So do you establish relationships with customers of yours, and do they keep coming back and buying, your through Easter, through the summer, through the fall, through Christmas, through all those periods? Do they keep coming back to you to buy more and more from you, or is it a one-off sale? So those are key factors as well. And then what it costs, things like what it costs to acquire a customer, those kinds of things are really important as well. Can you target those people really directly? Those kinds of things are really important. And then where do you get those customers? Do you have one, like, do you run Facebook ads and then you just get them all through Facebook? That can be a, if that's just one channel that you use, and that's the only place that you get clients or customers, then that can provide some risk and maybe lower the value, versus having a number of channels. So really important to consider those kinds of things as well. Then scalable operations. I think, if you put yourself on the other side of this purchase, of this sale of a company, are you more inclined to buy a company where you could walk in, spend your money, and then the business just runs? Or are you more, or are you walking into something that is kind of a train wreck, that nobody knows who does what, and everybody is kind of chaos? So obviously the first one, if you have documented processes, everybody knows what they do, they have key roles and responsibilities, that's going to be a much more valuable business to somebody, because it provides that clarity of, okay, I'm going to jump into this as the new owner, but I continue, everybody knows what they do. It's a big difference. So something really to consider there as well is the processes and things behind it. Um, all right. So I want to make sure I'm covering all the bits. So cash flow, all of that, of course. I think one of the key considerations here as well is that you've got pricing right in your business, and this kind of goes to one, the revenue bit, but also the profitability, the EBITDA bit as well. A lot of issues can be resolved with charging the right amount for your product or service, and I think it's so obvious sometimes to, oh, am I glitching? Sorry, guys. Internet's um there's nothing I can do really about the internet right now, guys. The whole internet went, so I'm on a hotspot. Hoping that it comes back on soon, but I can't help it at the moment. I will just continue on, and I apologize, and I'll see if people drop off. But uh, we'll figure out something. But I'll just keep going with it. Uh, yeah. So charging the right amount, the appropriate amount for your product or service is really tough as a business owner, because you want to service as many people as you can. And I get that. But sometimes this is where outside eyes can be super helpful to say, am I charging the right amount, and give you almost permission to increase your prices if you're not charging enough to get the kind of margins that you need to have a profitable business. So really important. I think just something to take away from this is to go through this process maybe with somebody. Are you valuing your services enough? Are you able to charge? Are you charging enough to do the kind of work that does get you repeat business? So just something to really consider there. I can't give you obviously too much specific advice on something like this, but I know it's something we go through. I see it all over Twitter, all kinds of business owners, they solved their problem when they started charging enough. So just something to consider there on both revenue and EBIT, which is the biggest things. Um, so that's really, really key. But I think improving your business operations. I got a bit. I've done a thing on traction here. So business operations wise, as well as documenting your processes, having meetings, business process meetings, operations meetings, sales meetings, marketing meetings. I know meetings is kind of a bad word, but bad meetings are a bad word. Good meetings are actually super useful if you can keep them moving towards action. It's valuable for your business. It helps your business get better and better. And something I think is a little bit overlooked, especially as a small business. Our time is so important to contain, and you want to work on the right things, but having the right kinds of meetings, and doing something, implementing something like traction or the entrepreneur operating system can really increase the value of your business, because it means that things are getting better and better. It doesn't happen overnight, but you have a process you're going through that's making your business more scalable, is solving the right problems within your business, and there's always action items and things you're working towards. So I did a whole live on that. You can check it out. But really, I can't express how much more fun it is to run a business that has good processes in it, and that people know what they're supposed to do. It's never perfect. The work is always ongoing. So something to consider there. The work's never done, but implementing something like that is going to make it better and better over time. And then profitability. I think, whether you do this over time, or leading up to a sale. So if you can plan ahead and think about the EBITDA number, and look at areas where you might want to pull back on investment. Maybe if you've grown fast enough for a while and you want to now set profitability as your number one uh, key metric, that you could look at expense reduction, or where maybe you're investing in the growth of the business before. Do you really need to do all of those things if you're leading up to the sale of a business? You definitely don't want it to stagnate while you're approaching a sale, but something to really think about there as well is not just continuing on with rapid growth and spending a bunch of money and not being profitable, because growth is expensive. That you want to also think about your profitability over that period, and can you shore up the things that you might be spending money on that aren't adding value to your business. So just some other considerations there for that. Um, Now, some other key factors that have come to light this week. So, Paul went to a conference and came back super jacked up and excited about some growth for us as well. And we're really excited to implement a few things. But I'll kind of go through a number of these just so you have an idea of what's kind of most important, down to kind of not least important, still valuable, but kind of decreasing in those things. But obviously, revenue, like I said, and then profit are your number one things to think about when trying to get the most value out of your business. But as far as like running your business, revenue growth is really important. So are you actually growing as a company? Are you retaining that revenue? So are the same people coming back over and over and over again? So that can be, just how satisfied are customers with your product or service. Super, super important for any business. And it becomes a flywheel. So, the more happy people you have engaging in your services or your product, they tell other people, and that starts to do its own marketing for you. And especially in a service-based business like ours, if we have raving customers that tell their friends, then it's less hard work for us. Like, we can tell people and advertise, and that we do great work. But of course, everyone says that. So, but if you hear it from a friend, they're more inclined to actually purchase from you. So, more of that. More of that is really important. Um, the more revenue retention that you can have, the better you are. You know, EBITDA margins, that's really important. There's one called cost of acquisition, for how much value you get out of a client or a customer over time. That's a really important ratio to think about. It's hard in a lot of businesses, like our business, really tough to tell what a customer acquisition cost is. How much does it cost to acquire a customer? Because we spend a lot of our time in education and things, and I just don't track that. I'm not going to say, my bill out rate is this, and I spent, 10 hours this week on marketing. So therefore, adding that to our marketing costs, and we, engaged with, 20 new clients. So that, the customer acquisition cost is X. We don't really go to that level. But if you have a business that does something like Facebook ads, and you know exactly what it takes to acquire a new customer, and then how much that customer buys from you over time, what's the value of that customer, that's really important. So the higher you, like the lower customer acquisition cost to lifetime value, the better for your business. So something to conceptually understand. I think it's not something that, business like ours, we're going to get fine tooth on, but to understand that, we should there should be a good ratio there. We should be not spending so much to get a new customer, um, and that. Next is, and here, this is the kicker. I think this is it. So often with small businesses, like, you are your business. So how much is your face around? And I know for my business, my face is around quite a bit. I enjoy that. That's, um, it gives me a lot of, I don't know, self confidence and things to know that I'm important. But it's a risk for your business, and is actually decreasing the value of your business if it's really dependent on you. Because, my face all over Avalon um, is kind of a detriment. If I sell this business, I'm not going to be there anymore. So the buyer might think, how much value is actually wrapped up in Joe doing YouTube lives, or blog posts, or YouTube videos, and that kind of thing. Or, um, on the flip side, if it's just nameless, faceless organization, sometimes that can be a good thing, especially if it has a lot of brand power behind it, that you know what it stands for. I mean, you can have something like, um, I don't know, the name that came to mind is another accounting firm, Grant Thornton, and that's it's a name or a couple names, but there's no Grant, there's no Thornton. We don't know who those people are. It's just a brand. So very low key man risk in that kind of business, but it's something to think about for yourself. Like, yes, to get launched and off the ground, um, it can be, useful to use yourself as the spokesperson for your business, but over time and leading up to sale, you kind of think, okay, how can I back away from being the face of this organization? And that's a tough one because, for a lot of your business life cycle, you kind of need the business owner has to put in a lot of their own energy and a lot of their own personality into the business in order for it to succeed. And so you don't want to pull out too quickly, but you also don't want to hang on too long where you become the only reason your business succeeds. So a fine line to walk there. Uh, Other ones, yeah, uh, I mean, think about things like the overall market as well. Is the market that you're serving a growing market, or is it getting smaller? That can be a big one, and really difficult to kind of manage sometimes. But taking a step back every year and kind of figuring out what the opportunities are with your customer base and where are the threats. So we live in a environment now, accounting and bookkeeping. We have AI on the horizon. Um, I We don't know what that's gonna look like. We know our bookkeepers still provide tons of value that AI can't even come close to doing it. We know that internally, but the perception on the outside is that this is all rote stuff, and it's really not. But we still have to be conscious of what that means over the long term as well for accountants and bookkeepers, the service that we provide. So what does that mean for us? Maybe leaning more into things like advisory, talking to business owners about the value of their business and what sort of activities they can be doing to maximize the value of their life and their lifestyle. Super important to kind of think about those kinds of things, um, where you have maybe some risk, some market risk of a decreasing market or things like that. Those are the main ones I think we'll cover on this one. There's a couple others, but um, all good. It's, really, I think, you kinda know what a valuable business looks like when you're enjoying working at it. You have a specific role. You know what your role is, and you know what everybody else's role in the business is. You've got good customers that pay you appropriately. You see profit on your income statement, and you've got cash in the bank, and it's generating cash every year. So you'll know that that's the thing. But what steps do you need to take to get there? And that's a concerted effort of a lot of different little things over the years. And that's your job as a business owner, is to understand what's the next thing that I need to work on, or what are the steps involved. And it's kind of being comfortable as well with not always understanding or knowing what's right, but that just you are taking action towards that overall goal long term. Really important. So that is kind of your job as the business owner, and hopefully as the eventual CEO of the business, and not the chief bottle washer. Over time, that you kind of give those things up, and are able to think about the business as a whole, and be a steward for it. I think that's it. That's how I see my role in Avalon these days, is more of a steward of the thing, and making sure it's moving in the right direction, rather than jumping in and doing a bunch of technical work, because it feels good. It feels good in our businesses to do the thing that we were originally hired to do. But for order to be a business owner versus a technical person, really you have to take a step back and um, be in service of your business, uh, to help it grow up and put on its own pants and all that kind of stuff. One last little bit here that I'll cover for this is, oh yeah, so I forgot to change this slide, but I'll show you the slide here. lots of improvement strategies that you can take and take a snapshot of that. We will post this live afterwards, so you can take a look over there. But yes, these are some of the ways you can improve your business. Um, then a couple avenues to sell it if you are looking at a sale, to do a direct sale versus, using a broker. And we've been on the other side of it, like dealing with brokers. We never bought a business, but we're close a couple times, and brokers were great because you know um, they can kind of take a lot of the sting out of understanding all this stuff, and they got somebody that's invested in seeing the sale be done, so they care a lot. Um, but there's pros and cons to each. So for a broker, like you get a wider range of buyers as well. I mean, their job is to have buyers at the ready, and they'll walk you through the process. So it tends to be handheld, but they will take a commission. So there can be, obviously a lot more on the cost side of using a broker. Direct sale, I mean, you don't have a commission to be paid, but you might have a smaller group of potential buyers. But can be great if you actually know the buyer already. And it it can be tough to know all the steps required and can get hung up for sure. Um, so one of the other sort of combo, and I've seen this with a business owner before, is they found the buyer, and then they used a broker to just help get it over the line. They paid a lower commission for that person, but that's another way to do it. If you have a buyer in mind, but want more handheld, you can talk to a broker and see if they'll help you with that at a reduced commission because they're not finding that buyer for you, which is essentially what often you're paying for. So that's another consideration there. All right. Oh, yes, we have another broker in the chat. Brokers have entered the chat. Nice. And then I think there's online marketplaces as well. So you can search those for industry connections, find potential buyers, post it yourself, that kind of thing. But there are obviously pros and cons to all these things, and worth kind of checking out your own situation to make sure that it's going to be right for you. I think, probably a good comparison is selling a house, whether you have a real estate agent or not. I think most do and get a lot of value out of having a real estate agent. But some do it on their own if they're willing to do the legwork, learn all the ins and outs and the potential pitfalls of that, of the deal falling through or people being flaky, where a broker may have experience and be like, don't work with that person and save you a lot of headaches just by having that person there. Mhm. Um, all right. So I'm gonna do a little conclusion before we go to our Q&A, and I did see a question. So number one, join our YouTube channel. You can pay us $3 a month and support the channel. That would be really cool. I will put up a little QR code for that. Join us. Join us. We do this all this stuff. I mean, it's kind of a marketing thing, but it's also just education for people. So if you can support us, it's super helpful. Helps keep us going, and you can buy us a coffee or whatnot. Uh, we always appreciate that. But of course, this is all done for free, and we'll continue doing it. So hopefully, you get some value out of that. And yeah, summary. I think overall, it's uh, just even if you're not thinking about selling your business or wanting to do your business at all, um, on that side and building that side, even building a sellable business is a valuable process to go through because it's a more fun business to run. If you've got processes in place, everybody knows their key roles and responsibilities. Your revenue is at a level where you can actually spend some money and make some mistakes. If your profit levels are there, so it supports your lifestyle, that's all important stuff. And a big component of that is pricing, so making sure that you're charging the appropriate amounts. And the other thing I'll say is just look back at the tax considerations for your business as well. So just being understanding of what it means to sell a business, capital gains, understand what capital gains means, your lifetime capital gains exemption. Super important to understand what that means in planning 2 years out. Those are the big things for that. But I won't say more on that. You can go watch it again. But those are the kind of key takeaways that I would say here. Now, if anybody has questions, I am super happy to answer those. I see one here already, which is great. How do you determine goodwill? This is it. This is the value of your business. So typically, what we'll see on a balance sheet is you've got computers and maybe some office equipment and whatnot. What's not showing on your balance sheet and your probably your biggest asset is the goodwill in your business. But how do you value that? There's no cash transferred, right now, like if you're just running your business, but there's value there. So really what that is the equity in your business. That's where what someone's going to pay you more than the book value of your business for. But how do you value that? And that's a great question. There's no tried and true way of just doing this because of all those factors that we talked about. But essentially, it often depends on your industry. So you might have like a revenue multiple because it's a well trodden path to be like, if somebody bigger is gonna buy you, they know what they can extract out of that revenue. So they're just buying your client base, and they will, use their, um, internal resources and be more efficient, and they know what that means to them, so there'll be a revenue multiple. And then oftentimes it can be a profit multiple. So you might look at a sort of 1 times revenue or something, or you might look at profit and look at, like, a 3.5 times multiple of annual profit, and that might be what the business is valuated at. But it really depends on the industry and then other mitigating factors like things like I talked about, key man risk. Are you all of your business and all your clients are going to leave once you sell the business? So that would obviously decrease the value of your business. So there's the quantitative stuff, kind of putting you in a range, and then the qualitative stuff of like things like, is your market shrinking? Do you get repeat business? Do you have a few different channels that you work with to get clients? That sort of thing. All super important in valuing the goodwill in your business. So no tried and true way. We do have a guide. Maybe Paul, if you can post that if you're there into the chat. Uh, Yeah, if you can post that in the chat, we have a business valuation blog post. Essentially, if you want a hard number of this, there's business valuators out there that will take a look at the nitty-gritty of your business and put a value to it. It's not cheap. They're certified business valuators and not just general CPAs. Often, a lot of them are CPAs, but they also have another ticket to be a certified business valuator, and they'll help come up with a number to ballpark the value of your business. Hopefully that answers your question, power networkers. Valuation guide. Yeah, Paul, throw it in the description there. Um, all right, Michael joined me. Says, do you have a chance to talk how to talk about how to price, perhaps based on multiplier of revenue. Yeah. So yeah, sorry there, Michael. Yes, we just chatted about that. Yeah, essentially revenue multiple or profit multiple are kind of your two general ways of doing it, but it is very industry dependent. And essentially, what people are trying to do is cash flow back their business. So, and I think this will work well with your second question, Michael. Do you see current interest rates impacting sale price of small businesses right now? And absolutely, that's all a big factor in determining that, because what we have is essentially what you're looking at when you buy a business is you're looking at the future cash flows of the business and then discounting those back to today's date. And you discount those by using a risk-free rate and then applying a risk amount rate. And what the government has changed, or Bank of Canada has changed, is the risk-free rate at the moment is quite high. So, if we go put our money into government bonds and as a risk-free or risk very risk low risk investment, they're paying higher interest already. So now our discounted amount back to today's date is actually smaller. So the value is smaller. So it would essentially reduce prices, and it makes sense too from a buyer's perspective. You're gonna borrow money in order to buy that business. Your interest rates are gonna be higher today, and what do you really care about? You care about the payment that you're gonna make every month, and if you can cash flow keep the cash flows up to pay off that debt. And if the interest rates are higher, that means lower principal, which means lower, price for the business. But interest rates have been really low for a long time, so you might say, yeah, lower than last year, but, historically, is it really are sale prices low? Not sure. Maybe more like reality based than having 1% interest rates. All right. Um, is it Adeth? Adeth? I'm selling my small business here. How do I determine the selling price? Yeah, so I mean, it's kind of how long is a piece of string, here because we don't know. It's kind of a few different things. So number one, you could get a business valuator. So hire a business valuator to understand what the a good price for your business is. But also you think about maybe other businesses like yours that have sold in the past. What did they sell for? What were their revenue amounts? And that. So there are some websites that can help with that. Just understanding, roughly what value to place on your business. But all of those things that we talked about, all the factors involved in valuing a business is what the price should be. And at the end of the day, the value is what someone else will pay you for it. That is the value. So really difficult to determine that, but we can get some ballparks first, what you'll accept, um, and and then what someone else will pay you, and that's what it's valued at. That's the fair market value. And if it's very different if only one person wants to buy your business, they can say any number they want. But if you have 3, 4, 5 people, now you get to start to see, okay, well, if they're bidding each other, what's the maximum amount that someone will pay for that business? And the way to get more than one person bidding on it is one, maybe a broker. They may have a few people that want to buy a business like yours. But the other is to create a business that lots of people want to buy because it's got processes, it generates revenue, it generates profit. It's not 80 hours a week for the business owner. All those things play a hugely important role in what someone will pay you for your business. So that's kind of it's not the short answer, but it is unfortunately the answer is that selling price is a variety of different things, but a good starting point is sometimes just a multiplier for your industry and see where it goes from there. You can always try. Thank you for that question, by the way. Trying to see if I missed any questions here. Thanks for coming, Michael. So happy to do them. Yeah, anybody has any other questions, um, please book them in now. I'll be here for another minute or two. Otherwise, if you do have to go, thank you so much for joining today. As always, please subscribe to the channel, buy our courses, support us in any way that you can, even if that's a like. We really appreciate all of the support that we get from this community and look forward to doing some more sessions. I will be hosting my next one in a couple weeks. I'm going to interview an HR expert for small businesses, and her name is Jocelyn. She does our HR work actually and runs a business called Reimagine Work here in Victoria. And they're great and have saved us lots of time. Mark, would you be interested in doing in-person speaking engagement up island in Nanaimo, home of the bar? I'm actually from Nanaimo. And Mark, you can always send me a message. Just shoot me an email or fill out a form on our website, and I'll get back to you on any details there. That's great. Or LinkedIn or something like that. Wherever you can find me, just shoot me over. I won't give my email away on YouTube because I don't get enough spam. But Mark, yes, you're happy to. I'd be happy if you reach out about a speaking engagement. Awesome. Yeah, thanks for that, Mark. Well, thank you, everybody, and really, again, appreciate you and this community. And please let me know in the comments or anywhere else if there's other ideas for sessions. This was actually an idea from a reader of my email or my newsletter, and she said, "Can you do a session on this?" I was like, "This sounds great." So we did this. So please keep the suggestions coming to whatever's on your mind. We're more than happy to put that in the schedule. All right. Thanks, everybody. Have a great weekend, and we'll see you in a couple weeks. Cheers.